3:30 already. Day is flying by. Markets today, Nasdaq up 105 points, closed at 8,120. Unreal. Dow up 145, closed over 26,656. Pretty crazy. Um, a big gainer I saw today was stock that I recommended to several people when I was below $15, just because of the platform that they have and the value that I saw there. That was Twitter. Was up over 15% today. It's pushing $40 now. Just about tripled from when I started recommending it. It was probably 2-3 years ago, but that's how long it takes sometimes for a stock to do that. I believe they beat earnings today. I'm not sure if they turn a profit. I haven't really read into it. Sometimes just subscriber numbers are enough for Twitter to get a big pop. Coles, you don't see them move this big very often, up 12% today, up to $75. We got some earnings coming in here, so I imagine the Coles beat earnings. Clean energy fuels, CLNE, a stock I've owned before. It's fallen. It's done well lately, but the last year or so, it was up over $10, and now it's 343. It did get down to under 2 briefly, so it's up to 343, up almost 7% today. A couple of stocks that I just saw that came in late here that were up. I'll put in the description later. ImmunoGen, we talk about ImmunoGen a lot. With the volatility on ImmunoGen is up over 8% today, back up to $2.51. Mobile Mini, you've ever seen those storage units around? I'm going to say Mobile Mini on it. They are a publicly traded company, traded for $37 under ticker symbol MINI. Mobile Mini. Smaller company, I believe, for a publicly traded company anyway, 1.7 billion. So they do pay a 3% dividend. Looks like they're not quite profitable right now. So I'm not sure how. You really got to wonder about a company if they're not profitable, but yet they're paying a dividend. If it doesn't get turned around very quickly, that dividend there is not going to last. So, I mean, if you look at it, I always look at a dividend to see if it's safe or not. The dividend per share to be safe always has to be above earnings per share to me. Because it just makes logical sense, doesn't it? I mean, if you're paying out $1 a share in dividends, and you're making $5 a share, well, you've got plenty of room to spare there. You can afford to pay that. But in the case of, this is a good example here of Mobile Mini, when your earnings per share are negative 18 cents a share, and your dividend is $1.10 a share, something's got to give there. So they must have had some positive news today from earnings. So maybe they can maybe they turn a profit, or maybe they can turn a profit here and continue to pay that dividend. But you just can't go on very long unless you have a huge balance sheet where you just got this pile of cash. Where you can keep paying out dividends. Most companies aren't that fortunate. Because if you're losing money, you're obviously, with the publicly traded company, the overhead that every company has, the employees, everything that goes into funding of any company, not just a publicly traded company, any company. It's just like I compare it to a household sometimes. Sometimes people make this so complicated, but it's really not. It's just a bigger scale than, say, your own household finances. The dividends are a perfect example. Let's say there's something that you're buying, maybe a luxury item that you're spending money on every month, kind of like a dividend in a stock, And if you're spending more on that luxury than you're actually bringing in every month, I mean, what's going to happen eventually, right? We all know what's going to happen. We can delay it, we can start putting that thing on a credit card, we can start borrowing money, we can do all these things, but eventually, um, you're going to have to either make more money, or you're going to have to stop purchasing that item that you're purchasing every month. Same concept. You look at income statements and balance sheets. Just take off some of the zeros. If you're just getting into this game where you're starting to learn how to read balance sheets and income statements, it's not that difficult. Just what you do is, and actually a lot of these income statements, because companies have so many zeros in different categories, they don't even put them all on there. They're literally in. It just says in the above categories that they're in the thousands or hundreds of thousands. So just look at it from a more simplistic view and say, okay, this is my household. Like, say a company is making $125 million a quarter, and you go down and you look at all, just like say if a family was making, or a person was making 125,000, it's the same exact concept. Um, if you go down the line, you're like, whoa, they're selling general administrative and selling costs. You'll see that one of the first items that pop up in the expense column. It's like, whoa, they're bringing in 125 um, $1 million here, or let's just say 125,000, just for the example. There's got 100 spending or they're making $125,000, but they're spending $200,000 on these on overhead, or not overhead, but selling costs, which are basically like your employees, CEO. So basically, what happens, you see it all the time. You look at any balance sheet. It's common, and companies can't do it forever, but they do it for longer than I'm amazed how long they can do it. I mean, imagine making $125,000 a year, but paying yourself $200,000 a year. Eventually what's going to happen there. So yeah, reading financial statements is not as difficult as it may seem. You may think you need some guru or some high paid accountant to take a look at financial statements. That's actually super simple to read. It lays it all out there. I mean, Ed, you have access to Apple's income statement. You can look with a simple search, go into Yahoo Finance, go into Google Finance. You can see exactly how much money Apple brought in last quarter, last year, the last few years. You can see that. You can see exactly what they're spending their money on. Maybe not down to the details, but the different categories. You can see where they're putting their money into. You can see how much cash Apple has. You can see the financials of every publicly traded company. That's basically, when you go public, you are forced to disclose your financial statements. That's why a lot of companies don't like to go public, because then their finances are scrutinized and everything. So if they're a publicly traded company, which most big companies are, a lot of the stuff, places you buy things from, the food you eat, the clothes you buy, uh, most of these companies are publicly traded, and you can just go online and find all their financials. Um, to me, I don't know why you wouldn't want to do it, even if you weren't even going to invest in the company. I was always so curious. Like, my curiosity is like, I can easily imagine where we live in a world where a company like Apple or Google, there's no way they're going to release their financial information, but they do. It's right out there. You can see it. So if you're in the financial world, or you're a business person, or even if you're not going to buy any stock in these companies, you have to check out the financial statements and become familiar with them. You're never going to make a significant amount of money in your life if you can't even read a financial statement. I mean, financial statements, that's basically, people with money, that's like that's their Bible. I mean, that's how you can tell how well a person is doing, how well a business is doing, just by looking at just a quick, I could look at a financial statement and tell you, and a balance sheet, tell you within 2 minutes what kind of financial health this company or person is in. It's extremely simple. Um, so yeah, just get familiar with it. Look at some different balance sheets. Compare companies. That's how I first started learning um, about how one company is undervalued where maybe the other one isn't. It's by looking at their financial statements. So I highly encourage you to go in and just do some research and read some of those statements. We didn't have much for big losers today. The market was doing so well. I see Rite Aid, which I think they must have done a stock split because I see their stock is almost $10 right now. I think it was like 50 cents the other day. So I'm pretty sure they did a reverse stock split. That's a huge red flag. Rite Aid has been throwing up red flags for 10 years. But I mean, this is like uh, Red Rite Aid has pulled. Talk about it. This is a perfect example. Talk about a company who cannot afford to do anything. I mean, they've they've restructured their debt. I don't know how many times. When you restructure your debt, to me, that's no different than going bankrupt. It's basically you restructure your debt because you can't pay it back. So they did that. They took all the money they owed and restructured it to make a longer pay period, so they could stay in business. And now their stock gets down to 50 cents. So now they do a reverse split where if you own shares, your stock is worth more per share, but your shares get cut. I mean, they must have done a 20-to-1 stock split. So your shares are it goes from 50 cents to $10, but your shares get cut by 20. So just simple example, if you own 20 shares of Rite Aid, today you own one share. And that's what happens when they do a stock split, a reverse stock split. So Rite Aid, that's kind of a similar example to like an Office Depot, a Sears, JCP. It's why anyone would own stock in those companies. I have no idea. Let's see. Yeah, no, not a whole lot for losers today, other than Rite Aid. But yeah, the markets are sure going higher. Got earnings coming here, so I don't know. The Nasdaq is literally has to be points away from all-time high, and maybe it reached it today. Did it? Says record. It did. Nasdaq posts record closing high today. This is the highest the Nasdaq has ever closed. Is today. So a couple of days ago, we talked in a video about double top formation in a chart. Okay. So if we're at all-time highs now, and I look at the chart, it literally has to be by like a point or two because the 2 points look identical. If you look at the NASDAQ chart, that is called a double top. It's when, at the end of a bull run, usually there's a sharp drop and then a sharp increase. It happens pretty fast and it creates like a double top, like a V right on the top of this mountain. And that's exactly what we have right now. Exactly. This, this makes me extremely cautious with the Nasdaq right now. We we are in dangerous territory. It, there could easily, I know people are going to be shocked, but you shouldn't be if there is a huge crash coming in the Nasdaq. A huge crash. It's probably going to happen fast. It's probably going to happen very fast. So I would keep an eye on that. We talked about it the other day. I said there's a chance where maybe if earnings go really well, that we break through these all-time highs and it just keeps going higher and higher and higher until it turns into some craziest bubble we've ever seen. Um, it'll be interesting to see what happens, but man, I've seen it so often. When I was first researching biotech stocks, that was one stock that I was interested in was Mankind, and it had this double top like that. And I was reading about charts at the time, and about these double tops, and I didn't. It literally, as soon as it reached that double top, it crashed. And I started looking at other charts, and I saw it happen many times. Many times, you get this double top. The last time the Nasdaq crashed, it wasn't quite a top like this one. There was a sharp decrease, and then there was a bump to the upside. It didn't quite get back to the highs before, but then it crashed. Now it got back to the highs before. So I don't know. Who knows? Maybe this thing will keep going. Look at that Nasdaq chart. It's pretty wild. We'll see. I think there's a good chance. I've said before, I don't think it's a bad thing. If you're not in the market right now, or if you've got cash sitting on the sidelines, this is exactly what you want. Exactly what you want. You want the markets to crash. That's where you're going to get the good deals. That's when you're going to make the most money, is when this thing tanks. Um, you know, I've said this many times before too. Getting in at all-time highs is rarely a good idea. Yeah, there have been several cases. There's been a few companies. Um, it's easy to say looking back, but at the time, I mean, Google, Apple, there's really been no bad time to buy those stocks. But if you think of all the other tens of thousands of publicly traded companies, if you buy the market in general at all-time highs, you're just going to get disappointed every time. So I wouldn't, I would be, I would not be buying anything right now. I've got some stocks. I'm not going to sell just because it seems like every time I've ever sold anything in my life, I've kicked myself. And it's not a huge amount of money. If I lost half, if my portfolio went down by half, yeah, it would suck, but it's not that large of amount of money where I'm going to lose any sleep over it. I'm pretty sure the stocks that I have will recover down the road. But if you're just sitting there, just kind of learning about stocks, you got a bunch of money, don't get in right now. Just wait. You could have a opportunity of a lifetime coming up here pretty soon. So just keep an eye on the Nasdaq. If it dips back under 8,000 there, if we just wait, hold out. We'll discuss this every day. I'm sure the Nasdaq will be a topic every day here for discussion. So we'll keep monitoring the situation and see what happens. It's going to be very interesting now that it has reached the all-time high. It's going to be very interesting to see what happens now. So, all right, tune in tomorrow and hit that subscribe button if you want to follow along with me and track this market.